Hello everyone and welcome to my new video about Datadog. So Datadog is a company that I've been investing in for a while, and I really believe this company has a big potential. I actually think it could be as big as Salesforce. I think this company could be to organizational infrastructure monitoring what Salesforce is actually to customer relationship management. And so that's how big this company's value proposition could be. So let me start by describing a little bit the business of Datadog, and then we'll get into the numbers and why I love it so much and why I think it could actually beat the denominator. So what is Datadog, right? So Datadog is a single platform where you can monitor your infrastructure, applications, network, security threats, user experience, and much more. See inside any stack, any app at any scale. So Datadog is a little bit like a dashboard for the modern organization, just like Salesforce is a dashboard for customer relationship management. It is a dashboard. And so what is a dashboard? To me, at least that's my take. That's how I interpret this organization. Well, the core dashboard is what? You have how fast you're going, your repetitions per minute for your engine, your mileage, your gas gauge, check engine light, anything wrong with the car, anything you want to do or to know what's going on in the car, you look at the dashboard. Well, the modern organization is moving into the cloud. More and more companies are moving into the cloud. And so they're faced with two options. You either log in to each different cloud tool that you're using, you log in and you check each of them, or you need a dashboard where you can actually control all of the subscriptions to different cloud services that you have and just log into one dashboard. And thus, one of the questions that I put forward in this slide is, would you rather have 50 or different apps, APIs, services that you log into every day to check if everything's doing well or not? Or would you like to have just one? And if you want to have just one, then Datadog is for you. And this chart, I think, perhaps summarizes Datadog even better than any of what I've said, which is Datadog solve complexity. So whereas in the past, a company may subscribe to all of these apps and you have to monitor them independently in different tabs and different tabs and different tabs, now you can have one dashboard where your DevOps, your operators, your programmers, the people in charge of your operations can just log into one single dashboard on a device and control everything, control all of their subscriptions, and command really the infrastructure of organization from one single spot. So I love what this company has to offer, and I think it has a lot of potential. It solves complexity. Datadog solves your complexity. It helps you comprehend the organization better. And this fits really well into the mega trend of organizations increasingly becoming digital machines. APIs connected to APIs, connected to APIs, connected to APIs, all of them operating with a minimal number of humans, right? It's just an API connected to another API connected to another API. And then your operations people simply control how the organization is working, just like you as a driver may make sure that your car is operating properly by looking at the dashboard. Well, the same is true for a developer in a digital organization. And as we go through this digital transformation, which is the huge mega trend, all organizations are moving to the cloud, are getting digitally transformed. They're getting agile. They want the cloud. The cloud is a cost saver. It allows you to save on every single part of the IT stack. So that's why I think this is a very powerful idea to invest in the dashboard, to invest in that front page of the operation of the organizations. I think it's very, very powerful. Um, and so, of course, it's all about the app, right? It's all about the monitoring app and how many apps it integrates. Because that's what's going to make it valuable, because you want to create a product that all organizations are going to want to buy. And so for that, Datadog, I think, has done a really, really good job, because they've integrated in their dashboard, in their one and only dashboard, more than 600 apps. And by the way, this is growing really, really, really fast. And you can see companies like Cloudflare, for example, the topic of my prior video, well, you can integrate it in Datadog. MongoDB, Salesforce, AWS, CrowdStrike. I could go on. So many of these cloud companies, you can then integrate them into a single dashboard where the manager can actually operate the firm, monitor the firm, and look at everything that's going on in the firm. And so this company, although it started as a real-time unified data platform, right? If you want to see how many orders are going on in all of your different apps, and you want to see that everything's running soon, they started out of data, but then they started adding a whole bunch of different things, right? Log management, application performance, infrastructure performance, digital experience monitoring, cloud security, developer experience. So they're investing in all of these different tools, and the dashboard is ever increasing, right? And as organizations get even more complex, you're going to have even more features in that dashboard. And I think one of the great directions of this type of business is that you're actually going to be able to move away from having engineers operating on these platforms, but just have artificial intelligence. Artificial intelligence make decisions in real time, solving problems in your infrastructure in real time, without you without you having to have hundreds of engineers or hundreds of DevOps do that. So I think that's a really, really big deal. And AI solutions in the future, which I do believe that companies will have a lot of them run by AI. These solutions may be provided by a company like Datadog, but they could also be provided, of course, as another app in that whole system that you just plug in. So I think this is a very, very powerful solution that they're offering, and they have a major moat, right? So they have things standing them away from competition. So one of them is barriers to entry. It took them, what, 12 years to build all of this. Imagine that. Imagine if someone has to compete with them. They have to recreate more than 600 integrations. That's a tremendous amount of work. So that's a major barrier to entry, both in terms of time and money if someone wanted to compete. Network effects. You have tremendous network effects on this. Not tremendous, but pretty high, because they have a marketplace where if you have a cloud app, it may be a good idea for you to develop an add-on that you just place on the marketplace of Datadog to make your cloud app appealing to any company using the Datadog dashboard. So I think this is a pretty big deal. And then moving on, switching cost, right? So just like all of the ERP system companies, it's a big risk to move away from them. So you're not going to take the risk to move away from them. If you are used to this monitoring system, over time, it's going to be very, very hard for customers to move away from it. So they may just keep going and keep using the platform. So these are all the ingredients of very, very good business in a very agnostic context or area agnostic, right? You're not focusing on just the DNS and internet traffic like you would be for Cloudflare, for example, or databases for MongoDB. No, you're just focusing on monitoring, which kind of like puts you as an add-on to everything else, or as the gateway to everything else into all the apps. Before I move on to the financials, because that's really the interesting part of this is going to be the financials behind the innovation, right? This is what the dashboard looks like, right? And so you have your different tabs here, and this is the dashboard. And so your engineers can just monitor the infrastructure of your organization, just like as a driver you could monitor how your car is doing. And so I think this is a pretty powerful dashboard, and it really allows company to be so agile, to move so fast, to solve problems so fast. And down the road, as more and more AI gets put into those, you won't even need to have humans deal with the problems, at least way down the road, right? You can have the AI do it. Like right now, it's still both working together, but down the road, these apps will probably be even more independent. So I think this is a pretty big deal. And so let me walk us through the financials of a company and why I think this company has a tremendous growth potential. And I think it will beat the denominator. Not investment advice, but I am pretty big on this company. So this company has had a 74% compound annual growth rate, 74% over the past 5 years, 6 years. So that's a tremendous accomplishment, right? This type of growth and the revenue growth rate eventually flows down to profits and eventually flows down to shareholder returns. So you could have tremendous shareholder returns on a company like that if it is able to keep compounding at this pace. And between 2022 and 2021, they estimate 55%, right? And so is the growth rate going forward going to be 55%? Well, not only do I believe it's going to be 55%, but we're in a bit of a recession right now, right? Companies are not spending on IT as fast. Once we move away from this 2022 recession that is induced by the Fed, what doesn't tell us that they're not going to get back to these rates? Right? They may get back to these rates. The total addressable market in 2025 for this company is $80 billion. $80 billion a year. They're only addressing right now between 1 and 1.5 billion of that. So, could you 50x revenue? You could, you absolutely could. And so you may go back to this very, very, very high growth rate. So I'm so impressed. I'm so impressed by the growth rate of this company, which is why I think it has a great chance of beating the denominator. So now let's talk about some of the headwinds, right? So there is competition, of course. The biggest competitor that I found, which is the closest one, is Dynatrace, and Dynatrace is a bit of a smaller company, and I just think it's a less innovative company. The way they sell, right? They have a big sales department. They tend to have a top-down approach to selling, so it's really much harder to sell that way. Datadog really has a bottom-up approach to selling, which is much better. They spend more money on marketing, and their growth rate is smaller. Is slower. It's actually slower by about 25%. Their growth rate. So even though Dynatrace is growing fast, I think 5 years from now we may end up in a situation where Datadog is 80% of a market and Dynatrace is 20% of a market. If the delta between the growth rate of Datadog and the delta between the growth rate of Dynatrace keeps being the same, right? I mean, the difference in the number of our customers is going to be huge down the road. So I do believe they will be second going forward, but they do have some competition, and competition is good. If there's competition, that means it's a profitable business to get into, and that means we're not the only one who sees the future market. It's actually external validation to have some competition. But I do believe in this case that Datadog is the leader. Customer concentration. There is none that I can think of. Retention. Over the past 20 quarters, they have 130% plus retention. So customer on year one spends 100, on year two spend $130 plus. So this is great. That means the new tools that they're offering is adding value to the customers, and customers are subscribing to these new tools. Then macro sensitivity. I do believe this is a recession-resistant business. This is a business that allows you to have fewer engineers work on your infrastructure because you have some AI, you have some events detection, you need less people to investigate issues. Digital transformation is mandatory. Right, that's part of a growth runway out here. Is if firms that do not engage in digital transformation will not be as agile, will not be as efficient, will not save costs as much as firms that do. And I do believe that firms have no choice. You have to get on board with digital transformation, regardless of a recession. Plus, this saves you money. This is a type of product that can save you money. So this is consistent with the growth runway. This is recession resistant. Companies are wanting to automate as much as they can, and their infrastructure, that dashboard is very useful for managing infrastructure. So I am very impressed in general by where the revenue is headed. Very small, very little acquisition, so they grow organically. It's organic growth, which is really what you want. You don't want CEOs to overpay for your acquisitions. And the marketing expense is actually, as a share of revenue, is smaller than for Dynatrace and smaller than for a lot of SaaS companies. So I typically don't like to see companies spend too much on generating revenue through marketing. And this company, in my opinion, doesn't spend very much. And I'll get into the numbers next slide. But this is what we get. So other questions about the company when you consider investing in something in a SaaS company or any growth stock really is, are they cash flow positive? Well, they are free cash flow positive. That's what matters to me. And they have a lot of cash on the balance sheet, which means that they're nowhere near bankruptcy. So the downturn is not going to hurt them. We don't have to be fearful that a fast growing company like Datadog would go bankrupt. Gross margin. Let's look at profitability. Gross margin is huge, 79%. Very, very, very high. Price to gross margin is very reasonable. We'll get into the price in the next slide. But then post-marketing gross margin, which again I think is very important, that is also very high. And out of the batch of SaaS companies that I'm looking at right now, this is actually the highest. And the price per post-marketing gross margin is only 33, which is once again very, very low. So it seems to me like this company is a good deal. Still growing at 55% a year. I think it could go up in the future. I don't care as much about operating in net margins because eventually these will become positive. I tend to think that operating in net margins are more for reason for an investor to say, I'm not going to touch that company, while they're really not as relevant in my opinion, because operating in net margin includes expenses such as R&D, which are so essential and where you actually have something to show for. You typically have something to show for R&D. I don't think you have something to show for an investment in marketing, although this is a debate in the SaaS type business. Debt. Let me talk about debt. Very, very little debt, just a little bit of leverage, but not that much. That means that this company is anti-fragile. It can handle diversity. Debt will not put Datadog out of business. Anti-fragile company. I love the low debt. Dilution. When the company first IPOs, large dilution, as is typically the case, they've been handling dilution. So not much more dilution than typical stock-based compensation. This is what I like to see. This is essentially flat over long term. Love insider ownership. There is very high insider ownership in Datadog. And there is actually a dual class structure which allows founders to keep control, which is something, for example, that Google has, which I think is very relevant and that I also really like. The business is founder-led. I love that. Right? Founder-led businesses tend to perform much better. And then the only orange flag, I would say, is revenue per employee. They've been hiring so much in 2021, like so many of these SaaS companies, and it's lowered their revenue per employee to a 428,000 per employee. This is my metric. I know not a lot of people use that metric, but I think it's important to have employees generate a lot of revenue for a firm. And I would love to get closer to 1 million per employee. You know, employees in tech software developers tend to make a lot of money, and so this is okay. This is better than some companies, but I would love over time for revenue per employee to go up. That's one of my favorite productivity metrics. So in conclusion, let us look at the stock price. And with the stock market downturn, all I can say is that this company has not moved much in almost 2 years and a half. It's essentially trading at the same level than it was 2 years and a half ago. But, you know, if I go back to this slide, revenue is about 3 times as much, right? So you have revenue 3 times as high, and the stock is trading the same. Like, this is not the same company. This is not nearly as risky as a company as it was back in 2020. But growth stocks have been punished very unfairly, and so this is a great opportunity. Same for a price to sales ratio. Not investment advice, of course, but same for a price to sales ratio. Great opportunity, I think. It's the least expensive it's been in a very long time. So price to sales, if you like that metric, you can look at that metric. And then when I compare it to other SaaS companies, especially Cloudflare and CrowdStrike, I find that they have perhaps the most compelling metrics. And my favorite spend, because I think that marketing more often than not is an expense, is lost money. When I see the post-marketing margin, they have a 57%, which I think is very, very, very high. This company has a lot of organic sales and spends less on marketing than your typical SaaS business. And the price per gross margin, the price per post-marketing is also pretty inexpensive. Keep in mind, for a company that grows at 55% plus a year, that may in the future grow at 60, 65, and 70%, this is a steal, in my opinion. Let me finish with a trademark of the channel, which is the dilution of the US dollar. The dilution of the US dollar, 2032. If it goes with what I expect, 15% a year dilution, $1 of today will be $1 of today will be more like 25 cents, right? Sorry, $1 of 2032 will be more like 25 cents of today. $1 in 2032, 25 cents today. And so what does that tell us for our market cap expectations, right? If you want a business to 10x, you need to look at market cap. Well, right now it's a $26 billion company. If it 10x, it would be a $260 billion company. This in real dollars actually would not be far-fetched in real dollars, because Salesforce is in that range, right? If you compare this, and I think this could be as big as Salesforce. Salesforce is in that range, so this is not far-fetched. But let's account for adjusted dollar dilution. So 260 billion in 2042 in 10 years. That would be the equivalent of $65 billion of value today. $65 billion of value today. I think this is a very achievable target. You're winning on both ends of the equation. You're winning on the nominator in this company. The nominator is growing, revenue is growing, profits are growing. This is a company that's growing really, really fast. And then lastly, the denominator will be decreasing. So I do believe that Datadog is a wonderful business here, and I am investing in it. This is obviously not not investment advice. Never and forever will it be investment advice. But I think this is a steal. I think this is a good company. So thank you so much for watching my video and my channel. I look forward to seeing you in the next video. Don't forget to like and subscribe. Thanks for watching.